Ewan, let's start with dollar. We thought the dollar rally was over. It doesn't look like it today.
No, I think you're right looking at the long trend line, but equally the dollar's come a very long way from its low points, and I think what investors are beginning to do is adjust to an assumption it doesn't continue on a one-way path.
Yeah, I think that's right. I think the clearly action last week with the recognition that we wouldn't have as many rate increase as was announced originally created a bit of that weakness, which helped emerging markets, and we saw this. But ultimately, there's a lot of risk on the road. We just published a piece called "It's a Long Road to November," and there are really 5 major things that could be very much risk enabling, if you want, between now and November, that will generally be favorable to the dollar.
Virginia, I love the phrase risk enabling. That's what we did not have in January here just 2 short months ago. I should just point out to the global audience, snow in New York this morning. So Vonnie and I are sort of, our heads are spinning here as we look at the weather. Well, we're risk enabling in the winter. You say we're going to risk enabling through the year, and I've got a Dow confounding the gloom, people. Is the equities markets in the developed countries, are they up because of central bank work? Are they up for good reasons?
Well, I think it's both the fact that the markets have come back, that you still have the support of some of the central banks, as you know, in Europe, in Japan, but also we will continue to have, in my view, a lot of choppiness, mostly because of those risk factors. And if you look at between now and November, clearly we have the election, we have Brexit, we have a lot of politics and potential for political earthquake or tremor.
Right.
We also have growth that is quite weak. I mean, if you look at the recent Chinese budget, if anything, it's telling us how weak growth in China is.
I'll go with the idea that growth is weak, but the fact is companies keep minting revenue in okay earnings. Is that enough to support this soiree?
I think it's enough, depending on valuation and the quality of the earnings. It's also enough if people don't expect too much. So again, if you want to make sure, if you want to have dividend earners in your portfolio, make sure they can pay it, and that valuation is not overstretched. And you want to bet on quality.
Ewan, Jeff Flacker of the Federal Reserve just talking in Paris, saying the Fed must not be caught behind a curve when the economy recovers, that he sees inflation firmer this year than last year. Is there a risk that because the Fed has now said it will wait to normalize a bit and it's cut down its interest rate projection hikes, that then it's too slow? It seems that they can't get it.
Well, I think you've got to have a period of slightly above target inflation because you've had a long period of below target inflation. And the core PCE, which, as you know, they focus on, has been creeping upwards, and it'll get another bump over the next 3 months from trends in owner's equivalent rent. So I think that by the time we get to the summer, you could say the Fed will have actually completed both of its main mandates. Whether that accelerates it, I don't think so. I think that they are taking this very cautiously, and indeed, as I said, want to have a period when that inflation base. I mean, Janet Yellen's comments over the weekend were, "I'm not sure, this is temporary, I need to trust it." That's the language of a central bank that's feeling its way upward rather than racing to the path.
But this is why. What is she exactly concerned about? She seems to be fearing some kind of recession coming from abroad.
Yeah, which, you know, I think the rest of the world is not great. Although, by the way, I think it is a little bit better than it was a few months ago, or at least the perception is a little bit better. So it's kind of half alive rather than half dead. But yes, it's the external environment that they're focusing on, which is unusual for the Federal Reserve.
Right.
I mean, normally, as Tom will tell me in a moment, they focus on what's happening in their own country rather than the global scene.
Ewan, is your world attached to Virginia's world? I mean, Virginia's worried about equity prices breaking out to record highs. Everybody's going gloom, gloom, gloom. I know we've got challenges in international relations. Do I just say, so what, if I'm an equity investor?
Well, I'm very attached to Virginie. We've known each other for 30 years. Look, I think that we're in a world where you're still, I mean, sorry to use the cliche, Tom, but we're still climbing a considerable wall of worry. I think at the end of the day it works like this. If the credit markets hold together, and for that to happen there has to be no recession. If the credit markets hold together, you get a bid for carry because base rates are so low, and that then stabilizes the junior end of the capital structure, which is the equity piece. You know, things aren't that bad. They're just not that good. So maybe it's new Goldilocks.
All right, I like that analogy.